Hello, trading is closed on June 28th, 2016. Yesterday I said I looked for a gap outside of the day's range. That actually happened. You can't count the actual cash prices because of the staggered openings. You have to go to futures. Here's the open of futures. When you put this there, you'll see we gapped up and promptly took out that high. So that worked. I gave the reasons why I thought we would have a gap up. I said I had some trepidation, but it did work, and the MEJT target printed. During the day, early on, MEJT said ultimately higher prices would print, and this line was the target. We dropped. We got a sell signal, and we got an ultimate sell. Target was hit. And we rallied, and then the target from early in the day printed. We don't have to get more of a move than this, but often we do. This is called a Hobson close. It's a close right at the high of the day. It tends to show excessive optimism by the public and usually is followed by a gap down when the market reopens, and that's what I think is the most likely scenario. If you look at this triangle I've been showing, these lines are Fibonacci retracements of the height of the triangle. Here's your 61.8%. You can see that's where we stopped, and it's a resistance area. And it wouldn't surprise me if we played Fibonacci ping pong between these numbers, between 2035 and 1992. Here's why. I relabeled this as an ABC. I was thinking maybe this was A and this was ABC, but this is an impulsive move. It's too late for an A. It's too impulsive for a B, so it has to be a C. So I think we've completed A down of some degree. If I'm correct, and that's A, B, C, D, E, down, then we have an ABC up with a Hobson close right at the resistance I showed. We should get a B wave down, a C wave up, and then start a blue wave C down, hitting our price target of just under 1940. So I'm looking for consolidation here over the next few days to weeks, and then a drop to this line. I don't think the drop is going to be over when that hits. Here's our thing. 1940 isn't on one of these lines. I think we're going to undercut these lows and go to 1775 minus at some point. When that happens, this whole big A, B, C for the fourth wave would be completed. We then have a fifth wave up. I think it'll truncate because when the wave 3 is this big, wave 5s normally do. And after that, we're in for a huge drop that's going to last years. So for tomorrow, I'm just looking for a gap down. And I'm looking in the intermediate term for consolidation between these two lines, 1992 and 2035. Of course, I take things one day at a time and I can always change my mind, but for tomorrow, gap down is my call, and that's today's call.